Welcome to the Tactical Brief, dear viewers, and to another issue of the Grey Market Talk with a retired market maker, that would be me, and a fund manager, chief investment officer, and bond trader extraordinary, Nick Themistocles, live from his, what is that, lair in somewhere in Germany or in England, we never know. Namaste, Nick.
Hello there, namaste.
Why Indian? I was asked after our last two shows, Thorsten, why are you so bullish in India? And obviously I've prepared some slides, and I got the final confirmation why this must be the country for the future. I'll show you the pictures in a second, and it's very, very interesting. What are we going to do today? I try to share my screen to give you an overview. The Grey Market Talk of today, we will have our thoughts from abroad, India, Trudeau, and the pirate. Then we will go into a very interesting IMF study, inflation, a game the whole family can play. I'm going to pick Nick's brain, what he thinks about this very interesting study. I haven't fully read through it yet, but if you're interested, find it on the internet, just put IMF in and study and you'll get it. And finally, I want to interview Nick, Nick's mindset. What's a CIO thinking when the last quarter is approaching? And split that into different parts. For example, you've had a raging bull year. You made fantastic performance. Are you getting cautious? We will go all into these details a little bit later, but let's start with my thoughts from abroad. India, Trudeau, and the pirate ship that is Germany, and G20 summit. We had this in New Delhi, and there are a couple of interesting outcomes. Obviously, the whole conversation was again about sustainable and green agenda and reducing CO2. I just want to go briefly to these points, and Nick, feel free to jump in every time you see that there is a positive point for India or a negative point for India. So accelerate the full and effective implementation of the 2030 Agenda for Sustainable Development. That's positive for India, right?
You say so?
It's bad for us, yeah, because we're giving up and handing over the baton to India. Great, I want to invest there. Act on an agreement to triple renewable energy capacity globally by 2030. Also good for India, in my view, because we will take over the renewable stuff, which makes it unreliable, while India is keeping its industry in a good state and profit from the availability of energy. Pursue low GHG, low carbon emissions, and climate resilient and environmentally sustainable development pathways. That's again something which will concern the G7, not the G20. So again, a positive point for India, because everybody accepts that they have to grow. And scale up financing from all sources and accelerate efforts towards achieving the Paris Agreement, including its temperature goal. Is that still 1.5%, 1.5 degree, or have we gone down or up on that?
No, it's still 1.5.
Oh, while I wanted to slip in, UK, you're an expert there. Rishi Sunak, the Prime Minister, has actually defused, they say, the very ambitious climate goals in the UK. Can you brief me on that?
I must say I didn't read the what he changed, but I think the tone is effectively moving away from what the previous Prime Minister was doing, which was saying that the UK is going to be the carbon or the low carbon leader, into something a little bit more pragmatic. And I think this pragmatism is probably what is necessary. I said for more than a year now to my clients that these climate targets, if they were realistic, then you would say that they are achievable and they'd probably be stuck, but they were unrealistic from the beginning. And therefore it doesn't surprise me to see some people, especially the UK, being pragmatic and saying, well, in this respect, I think we can row back some of our promises, and we don't want to overdo it. We don't want to kill the economy now. We have to be. They still have their end goal. They still want to be part of this whole low carbon world. But I think rowing back some of the targets, allowing the country to develop these transition, strategies, is almost certainly the right thing. And tactically, obviously, for Rishi, this is a story he can go to the voters with, and say, look, we're doing something. We're being realistic and not bureaucratic.
It's giving them a fighting chance, the Conservatives, to win the next election, right?
Yeah, I mean, it's a real uphill battle. I think because there have been so many cock-ups for the last few years, so they've got to do something, and they needed something like this. Whether it's enough, because they, obviously they have to avoid these pitfalls in between. The Bank of England may well have, sort of said that's it for interest rate rises. Should have said that a long time ago, and perhaps one or two changes like this may well be enough, to give them a fighting chance at least. Whether they do it or not, we'll see.
Well, the Bank of England's decision last week actually played into that. Yeah, as long as people in the UK are still able to afford their mortgages, and the state is not picking their pockets while going for the carbon emission targets, the Conservatives might have a chance. I don't see that yet. I think there's simply time for change. Yeah? You had a Conservative government for how long? 15 years?
I think they've had 4 consecutive kind of voting chances, and this would be the 5th, which I understand has never been done before. Yeah. So, good luck to Rishi if he can achieve that. But, there've been so many missed opportunities, I think, for the Conservatives that it's going to be very tough. And especially, I think, I think the Bank of England have made some major errors, which have cost the country a lot of wealth and cost the people individually. So that's a bad thing. But Rishi's not done a bad job, I must say. And I think this climate shift, whilst it's not really a shift, it's pragmatism. And I think, voters like to see people being pragmatic. And I think that's good, rather than ideology sort of driving the country. And I think that's a very good thing.
Isn't that funny that they might be actually going into the direction Kwasi Kwarteng was sacked for?
Well, it's possible, but they're not, given that Hunt is going for austerity, yeah. But he is wrong, right? Okay, he is wrong, but I think he did it because he had to show the market, I'm doing something sensible. To be perfectly frank with you, this unfunded extra borrowing, where do you see unfunded extra borrowing? Well, you see it in America, but it doesn't affect them. They just say, well, 300 billion of this, and all unfunded. I mean, the whole thing is unfunded, and yet it cost, the Brits their status. And if you see the Treasury market, there's a bit of disorder in the US Treasury market right now. So if they're not careful, they'll be next.
Yep. Oh, well, but finally, you're actually about to sign, as the UK, a trade agreement with India, which brings me back to my positive point about Microsoft PowerPoint. You see it again, right? So, improved access to digital services. That's something Germany would actually be, advised to do. We have this problem. If I want to move to the countryside, Nick, stuff the internet. It's not going to happen. Very interesting for one of the most apparently industrialized countries. Closed gender gaps. I found that very interesting. Mr. Modi promised to fill up the Indian parliament with 30% female quota, which I'm a big supporter. And don't get me wrong, getting women into politics is always very good at the beginning until they become more than 50%. Sorry, I shouldn't say that on air, but Ann Coulter also said in the United States, she's the conservative lady who forecasted Mr. Trump's election while nobody believed it. She said it's simply mathematics. Female voters are inclined to go for the Democrats, for the liberals, which is, as a tendency, not good for the economy. The noise you just heard is, I warned Nick beforehand, that is one of my light blinds that just went down. So if I get a little bit hazy on the screen, that's the reason for it. So a good thing, yeah. There is an enormous potential in women in the workforce, women in management, women in education. But India was anyway on the right way already, and now they've just made it official, I think, to give to the Western countries what they always brag on about. Then call for reform of the multilateral system and reform the international development finance system, including more effective multilateral development banks. That means more money slushing into the system. I think the world has realized that the future music is going to play in India, and that will just enable them. So it is a very successful meeting for Mr. Modi and India. And commit to rule-based, non-discriminatory, fair, open, inclusive, equitable, sustainable, and transparent multilateral trading system with the World Trade Organization. Have they left out any buzzword? I don't think so, right? They
that
got
was
them all
a
in.
hell of a sentence.
Yeah, so fantastic. But overall, it was a fantastic meeting. And I think, I might be completely wrong, Mr. Modi outed himself a little bit as a conservative here. And that is a very interesting explanation. I had to bring this picture in because obviously it all culminates in the point I'm going to make in a second. What he managed, by the way, the guy with the eye patch, that's our pirate. Our in there, still from his running accident where he apparently fell over. They all got them to either wear no shoes or sneakers or flip-flops or slippers. That was at the monument to Mahatma Gandhi, where they showed respect. And I thought that was actually very interesting. In this picture, for me, it shows who is running the show in the future. You see the guy in the front, and you see the guys on the left and on the right, and they're all not wearing shoes, and only Biden obviously was allowed to wear some sort of sneakers to make sure that he wouldn't fall over during the next, step on the way. And now we come to my favorite bit, because we've just established that India is doing a lot of things correctly and that the future might be lying there. And now we come into my country, into the thoughts from abroad. And I think the biggest... how do you... I'm looking for the right word. The biggest blunder was done by Mrs. Baerbock, our foreign secretary or foreign minister, or however you want to translate that, because she called President or Chairman Xi a dictator. And China was rightly upset about that. Mr. Biden, or President Biden, called Xi, I think, 4 weeks ago. He used the same phrase, but I think people forgave him. First of all, he has a lot of nukes. Secondly, he's a bit senile. So that went away. But Germany has neither nukes, and I think she's too young to be senile. And she's not too young to be not very bright. But how can a blunder like this happen, Nick? Especially when China has this massive importance, overboarding importance as a trade partner for Germany.
That's a really good question, because, I don't think it's a blunder, actually. And I think this is the way that truly she certainly thinks, certain parts of the government probably think that way. And the question is, she has no problem, for whatever reason, to be very public about it. I mean, you might want to feel that way, but for a diplomat to say that in public, I think is more than dangerous. I don't know the right words for this thing, but that was, in my view, and I think many other people would see it that way as well, out of order. But as I say, I don't think it's a blunder, because there was this story that came out during the week about the Bundesbank warning Germany is far too close to China and is far too reliant on China and stuff from China, and obviously, I don't think they were particularly worried about selling stuff to China, but they were certainly worried about the dependence on buying stuff from China. And I think, that just, and they talked about the business model, and I didn't really sort of read the article fully, but the message was, don't do so much with China. So if you don't do so much with China, you've got to do stuff with other countries, and you make a decision what countries they are. But, again, this is geopolitics or ideology, and I still don't know which one it is, mixing in with business here for an industrial country, an export-driven country. And some companies, large companies, have a third of their business with China. What do you want to do? Do you want to just sort of draw the line and say, all right, let's start again and try and sort of establish relationships with other countries? I find that outrageous. And the question is, why is it, and why is it happening now? And what is it that they're thinking about? And you might want to speculate and say, well, perhaps China is, there's a probability that China might do something in the future. and that whatever they do will result in sanctions by Germany. And if it results in sanctions, then obviously, we're going to stop companies doing business with China, and best they're prepared for that. I mean, it was all very well with Russia to say stop buying oil because you're going to buy it somewhere else. But when you've already got supply arrangements for products and clients in place, those things take many, many years to put into place and replace. So, I don't know. I think there is some long-term thinking taking place here, and I think Baerbock probably let the cat out the bag to let them know that they're not frightened to take their business elsewhere. Well, good luck.
I had a nice political argument with some lefty on Facebook the other day. That's why I looked into the figures. And the question I asked myself, trade deficit between China and Germany. 5 years ago, it was about 6 billion. Now it's 10 times that high. So is that actually, which means we are just importing a lot of stuff from China, but we're not sending a lot of stuff back over again. So if they pinch the hose, we can't get cheap stuff anymore. The problem is, as they're not seem to be buying from us anyway anymore, well, what's the issue? So we have to just as you said, or the Bundesbank might issue, we have to get more, well, self-reliant on our own production. Yeah? So has she picked a good time for that? I don't know that she actually knows how the trade deficits are. So they are driven by their own superior feeling of, how do you call it, being good people, yeah, shipping that over. And I still think this was a blunder. I can't believe that something like that would have happened to anybody else in former government. Well, anyway, yeah, I think there is a point to it which we should keep in the back of our mind about whether there's a danger or not. But hey, let's come to the next beautiful thing. Germany sent a delegation over to New York to speak in front of the United Nations, 2 state secretaries and a whole press bunch to talk about climate projects and stuff. And they did a big presser, and they had 7 journalists sitting in there listening to the Germans teaching the world how to make the world a better place. Interestingly enough, all these 7 journalists were on the plane being flown over from Germany. So nobody actually in the United Nations wanted to listen to what we have to say, which is just as well, because then you've seen it's all built. It's from the biggest tabloid in Germany. We are slipping into a housing crisis in Germany, and that's actually very, very interesting. Obviously, interest rates are going up, stuff's getting more expensive. We have a lot of refugees and asylum seekers coming into Germany at an unprecedented rate, especially into Europe now. We've seen that what happened in Lampedusa last week and the week before. The ultimate target for a lot of these people coming over is Germany or the UK. You have the channel between us, but the French seem to make it very transparent to have people coming over into the UK. And building has become extremely expensive because the laws in Germany, especially the energy laws, which went through the Bundestag, makes it even more expensive to build sustainable or payable housing or fulfill the housing requirements people have. And this is very interesting. German prestige objects, the 6 largest, I have only 5 on this slide because I couldn't get the other one in. The developers all defaulted over the last weeks. And these are big prestige objects. Yeah, one of these Grand West opposite the trade fair in Frankfurt, I drive by quite regularly. Looks very nice. But it seems as if in Germany, the big building projects are tanking, and they're tanking massively. Yeah, what we can see here is simply that investments are not being channeled in the building and construction sector. We are killing our automotive sector at the moment, and when we have a situation like this and a growth of, that's an old slide, Germany probably now below minus 0.2%. There's one thing I do not understand, and obviously I'm not making any recommendations, but I have the chart of the DAX in here. And I remembered back, it's now 6-9 months ago, when the whole world and its stock, non-domestic Germany, said, yes, we have to get out of the United States, just when this started running quite nicely and have to invest in Europe. Obviously, Germany being a big part of Europe, a lot of these flows of funds went into Germany and elevated the DAX, our lead index, of 40 pizza delivery services in the meantime. Sorry, I'm a bit facetious here, but to the levels of all-time highs. And seeing what I'm seeing in Germany at the moment with all the news, all the blunders that are going on, the G20 summit, how we are decapitating ourselves, we have a fantastic level here. Nick, do you have any explanation why we are at these levels in the DAX still?
Well, so let's try and think about this. This is a kind of a global phenomenon, this whole liquidity thing. Yeah. So, the whole market was very negative in 2022. Liquidity bottomed, we know, at the end of 2022. And since then, we've seen markets rally. Now, how much the markets should rally is a totally different thing. So the direction was clear. The magnitude is the one that I think is probably causing you most stress, because if you saw the bounce like every other market, up towards the blue line or a little bit higher than that, you'd probably say, oh yeah, that kind of makes sense. But to see all-time highs, I think that's probably where you're getting a bit stressed by it, by all of this thing. And I tend to agree that, instinctively, just purely on fundamentals on their own, you're probably right to sort of question, well, hang on a minute, what are we doing up here? And I sort of say, for the same reason, we've been cautious on Germany. As you can see, being overly cautious has been the wrong thing. But fundamentals and markets don't always collide. Yeah, I mean, they're not always at the same, in sync. There's a difference between, the financial asset cycle and the economic cycle, and sooner or later, those things will come in. And right now, I think, Germany does look a bit heavy. But I can't sort of explain why were we at 16,400 and not at 14,000. I think that's that's somebody else's expertise.
One of the things that stuck in my mind is your explanation. We talked about that in one of the previous issues. Once we go full socialist, you have this explosion of fiscal money getting into markets at the beginning, which will give us the final, how do you call it, the last hooray, which could be on the cards. That's the only explanation I have in my mind to say, okay, fine, if the market is efficient and we are at the levels where we are, could that actually mean, yes, this explosion is just ahead of us? Instead, my old theory, instead of clearing out their mistakes, they're going to double down on what they're doing. And double down is then the next, if take all the money you don't have and put it into the economy and give this last hooray. According to Thatcher, sooner or later you run out of other people's money, but we're not quite at that stage yet. If I had to open up a trade at this time on the DAX, well, obviously I don't have to explain how the risk-reward ratio in this trade looks for me at the moment. I'd clearly see the potential to the downside, even quite aggressively, to test the 11,600 again, because we are already in a recession, Germany, now the third quarter, I think, of unofficially or officially, and it doesn't look to me as if it's getting any better. Yeah? So eventually the market will have come to back to reality. And when we see that, I don't know, but a runaway explosion to the upside, but we'll touch on that a little bit later, obviously in the segment when I'm asking you, how do you position yourself after 3/4 of the market of the year already in? If I would be allowed, which I'm not, to give recommendations, which I'm not doing, I would be here on the short side. Not maybe on a 2-day basis, but I think the risk is very clearly on the downside, not on the upside in this trade. Lovely, but there is still hope. I put one chart in. If you've ever made holidays at any place, and Nick's surprised because I slipped this chart in later after I sent him the chart deck. You see German tourists and they're wearing sandals, usually with socks. But the sandals are something very unique. They're called Birkenstock in Germany, and they're very pricey, very expensive, very popular worldwide. In the meantime, over my dead body, you would see me wearing them. However, you see them a lot, especially with socks. And these are the growth rates from 2014 on in Birkenstocks, and these are the half-year figures. There are two ways to interpret it. If they make a good last half year, they will not quite catch up to their record year of 22. So what's my interpretation of that? Has the market peaked? I obviously do not have to mention that it's usually not conservatives wearing Birkenstocks with socks. That's from the different persuasion of the political spectrum. Have we peaked here? A slide I haven't in here, which coincides with that as well. The last earnings reports in the US, the word ESG has been mentioned dramatically less than before. So there might be a shift coming up. I thought, yeah, let's bring the Birkenstocks in. I haven't run the correlations on this whole thing, but that was my last slide on that section where I thought, yeah, maybe we've peaked with madness, with Mrs. Baerbock insulting China, with destroying our economy, importing electricity after we've switched off our nuclear power plants. So maybe there might just still be hope. Otherwise, you've seen the DAX chart just in front of you. And that would be my last words to this section. Any last words from you, Nick?
One thing I didn't mention on the DAX chart, and thanks for showing me some sandals here, but for a long while, right, the European markets have been very cheap versus American markets. And I know that there was a lot of flow from the US into Europe, at the start of the year, end of last year. And it could well be that, this PE relationship has been the trigger for some reallocation of money from the States into Europe, and that may well have been the reason we've gone a lot higher than we have you and I would have otherwise have thought. And as for Birkenstocks, no, I can't really comment. No, it's not really a signal for me to look at the Birkenstock signal and say, oh yeah, we must have peaked.
I think I'm the first one who ever brought the Birkenstock signal up. So I'm taking pride in that. Let's follow that up for the next 10, 15 years, Nick. So a very interesting study came out by the IMF on inflation shocks. Inflation, a game the whole family can play. And I went, by the way, this is 10 million mark. That was before the real inflation set in Germany, when a loaf of bread did cost 10 billion Deutschmarks, and where actually the paper was more valuable than was written on it. What is actually the definition of hyperinflation? 30% a month. Yeah, not a year, 30% a month. Then you are in the region of being called hyperinflation. And the study came out by the IMF, and they have 7 core points. And I just wanted to run them by Nick, how we are in this framework, obviously now focusing on the United States. We had Jerome Powell last week. Did he shock the market a little bit, Nick? Because I have to obviously give credit to you. I expected a rate rise of 25 basis points, which did not happen. You said, no, it ain't going to happen. I was still, delusional that I thought, if you want to do it now. Build up the level from which you can actually reduce interest rates. Don't keep it in front of you that there might be one in November. So kudos for that. I was on the side of the 30%. You were on the side of the 70% who saw the market right. Getting into this inflation paradigm we have at the moment, I found the core points of this study actually very interesting. I thought I'm going to pick your mind on each and every one of them. Inflation is persistent, especially after a terms of trade shock. Did we, through Corona and what we have seen over the last 3 years, did we have a terms of trade shock here, or was that just an aberration we saw through the epidemic?
I remember a while ago looking at a study which basically said that the UK had suffered a terms of trade impact, which was the reason why inflation was, how should we say, taking a lot longer to come down versus versus the States. But I don't see too many references to terms of trade as being a reason for inflation being either sticky or not. I mean, this is a real geeks inflation economics kind of question. Write an essay on inflation is persistent, especially after terms of trade. I just wouldn't know. But I don't know. I mean, this is a statement from the IMF. Is it a fact?
It boils down to the question: are we running into secular inflation here? Yeah, is it not transitory? Especially, we discussed before the show started. Obviously, the labor unions in the United States now coming out with a strike, which have, in my view, why do they go on a strike? They feel powerful at the moment. Yeah, there's this hoarding of labor, and you need qualified labor, especially in the car manufacturing industry. So they must feel quite strong when all three unions at the same time are pulling out their knives and say, listen, we want 40% more, which is a very good strategy. The pay increase the CEOs gave themselves over the last 3 years. So yeah, fine, I would run with that number as well. And I was never being suspected to be a fan of labor unions, but at this point in time, I think after what we have seen, that your average shopping basket has not increased by 9% peak inflation. No, it's doubled. You go shopping in the United States, in Germany, all over the place, you pay almost twice as much for your ice cream, for your daily amenities you need in the basket. So when we see this, and it filters through employment contracts in the United States, as it without any doubt will do in Germany or in the rest of Europe, as long as we don't get this under control. It leads me to the second point. Most unresolved inflation episodes involve premature celebrations. Are we already celebrating that the beast has been killed? Yeah, the UK last week came out, no, we don't have to do anything. Inflation is coming down massively. Jerome Powell said, yeah, well, we don't need to raise now. Obviously, we are data-driven and we have our eye on it, but we are on track. Let's put it that way. Are we already celebrating?
Just reading that number too, I honestly, I've not seen this paper, so I haven't even had a look at it, and I can't really judge. But, it sounds like they're trying to sort of send messages. I don't know whether these are facts or whether they're just trying to steer the mind of the other central banks right now. The question of, are we celebrating inflation coming down? Well, we shouldn't have got there in the first place. If people really knew what they were doing, frankly, I think the celebration will come when people understand how inflation started, that they admit it, and they know exactly how to deal with it in the future. Do I see any celebration from the ECB? No. Bank of England? No. Fed? No. I don't think there's any form of celebration whatsoever. I think they are going with a narrative of, a very stern, approach. We're going to check the data, and if we see this thing going up again, we're going to stamp it out. And I'd be really happy if these guys understood, or at least admit what caused inflation at the beginning, and that they say that they understand, how to deal with it, because interest rates are really such a blunt instrument, and you affect the whole economy, and it may well be sort of one aspect of the financial system where the inflation erupted, but you turn this dial and you hit every single corner of the economy, and you've not dealt with the problem that actually caused the inflation in the beginning. So I don't see any celebrations. I don't see central bankers admitting what caused it. I don't see that there's a study from the IMF to say what caused inflation in America, Europe, and England, and this is what they should have done. I think this sort of list of, teaching people about some inflation history in the past is frankly, I won't say irrelevant, but it is something that is they'd have done much better issuing a paper on what went wrong and what the central banks of Europe, America, and UK need to do in future to sort of avoid the mistakes that they made in the past. I think that would be a much better paper.
Two theories out there. Nobody actually really knows what causes inflation, or my theory, printing a lot of paper causes inflation. You might go into the details on that or not, but the third point actually fills in. So if you say they're not running victory laps yet, then the countries that resolved inflation in the past had tighter monetary policy. That seems to make sense. Now we're looking at the monetary policy. Fiscal policy is still pissing away as much as is possible there, right?
Yeah, there is further weaker evidence for tighter fiscal policy and better inflation anchoring pre-shock. So they kind of bring in there the fiscal aspects, and to come back to the point where you say you think it's all the money sloshing around. Yeah, I'd say and according to Milton Friedman, it's always and everywhere a monetary phenomenon, and just printing so much money. Whether it was done by the states, it was supported by the central banks. And manage. See, I'd like to see here. Does it say anywhere here? Well, I'll let you go through. But does it say anywhere about controlling money supply? And if it doesn't, stick it in the bin.
Well, I think the interpretation for that point would be countries that resolve inflation implemented restrictive policies more consistently over time. Maybe you could take that as a stance where you say, fine. If Jerome Powell and the ECB and the Bank of England are still sticking to their guns and not being wobbled away by the market, you could interpret that as, we've identified the problem, and even if we are, the Volcker approach, I want to be a hero like Volcker, that's what I'm going to do. There is a chance actually to tackle that beast if they stay consistent. I don't know whether they have the power to do that, or when the first accident in the markets happened, we'll see rate drops by 50 basis points 3 times in a row, because as they always do, they're always far too late to the party.
Of course, because they, we talked about this before, they look at historical data and they're not really forward-looking people. And as I say, they've got this blunt instrument called interest rates. They're affecting people who had absolutely nothing to do with inflation in the first place. And I'd say that, this paper is, I'd like that word restrictive policy to be substituted by, controlling money supply, and be, say what it is, because, if this was the cause, and that is the cure. And everything else that you're doing about tighter monetary policy and all of this stuff would be irrelevant if you started to focus as a central bank on other aspects. This money control and money supply, they abandoned years ago for whatever reason, and it's still not come back into fashion. And in my view, that is probably a much better way to control inflation. And, I could have saved, I don't know how many pages this report is, but could have saved the authors a lot of time just by having one line here and leave the rest out.
Yeah, well, then it's there. In the next point, I actually see what you just mentioned, one of the biggest contradictions we have here. Countries that resolved inflation had lower nominal wage growth. So that is a bit of a head scratcher for me, because nominal lower wage growth we have seen in Europe, we have seen in the United States. We had this inflation of asset prices in there. The worker, the average Joe on the street has been screwed over for the last 10, 15 years, without any doubt. There has been a redistribution to the, how does Bernie call them, the billionaire class, in asset markets, while the worker on the street did not see anything to actually eat up real inflation. And then we had this scenario we have now had over the last 12 months with this peak we have seen here. That doesn't seem consistent to me, because we shouldn't have had inflation then in the first place, should we?
Absolutely. And I think it's so, again, these central bankers who come up with stuff like this, having made a big hoo-ha over the inflation thing, Every newspaper says about inflation. So every shop takes advantage of it and says, oh, there's inflation. Let's jack our prices up a little bit here and we should be able to get away with it. And of course, every worker who says, well, hang on a minute, you're paying me the same money. I still need to buy stuff. So please, can we catch up? And that's just natural. And this is that number 6 is what one of the central bankers, I think it was one of the English central bankers, is, well, workers are just going to have to accept less. I mean, forget it, mate. Nobody's going to listen to you. And if I look at all of these points they're making, it just gives more control. I think the conclusion, if you follow steps 1 to 7, we've only done 5 or 6, whatever, you follow number 7 is equals you'll be in so much financial problems as a country, you've got to phone the IMF to come and tell you how to run your country. I think that's basically where they're going.
I think point 7 they pulled out of the head anyway to have 7 points because it looked nice. So it simply says countries that resolved inflation experience lower growth in the short term, but not over a 5-year horizon. Well, no shit, Sherlock. Yeah? Wow, you tackled inflation. How did that happen? Your economy tanked, and yes, you're experiencing less growth. And eventually, the market will do what market always do: move into the next cycle, and growth happens again, as long as there's not too much interference. Now, what I thought it's worth mentioning, especially running all these points through, I think, especially after last week, we are a bit at a threshold. If you listen to Powell, what he said, it was actually, yes, higher for longer. That I think was the message which also scared the equity market a little bit. People are realizing what is going on, and if you should take the Fed serious, it always comes back to the old point: don't fight the Fed, right? Why are equity markets lying and fighting the Fed, Nick?
I think people did try to fight the Fed in March when they basically said cut rates after the Silicon Valley thing. I think the markets kind of realized early on in 2022 that, what the direction of travel for interest rates, and I think they followed it. And I think the only dissent was in March of this year when, after Silicon Valley went under and a few other banks, where the market basically said, we think you need to be careful here. And I think the only reluctance was, the Fed just carried on, ECB carried on, Bank of England carried on. But I think the message from the market is, we know best, ultimately. And, we'll see who's proven right here. But, I don't know. I think the Fed and ECB and the Bank of England have gone too far. So I'd be fighting the Fed here.
Yeah. Now, last slide I put on is obviously where inflation is and isn't. I already had that on the screen last week, but it's actually interesting to look at the earnings. Again, there was a podcast or an article, something came across last week, and it said especially the automotive workers, if they have a 40-50% increase in wages, that contributes to the costs of a car by around 10%, which is okay, fine. However, if you have a tax advisor and he wants 40% more, the cost of your increase of the tax statement will be directly translated 1-to-1. It will get 40% more expensive. So we should have, and maybe that's what the Fed is doing, having an eye on the earnings inflation. Not because they want to be mean, but that is necessary to have, we use that phrase a couple of times now, social cohesion in a society where the workers can't afford living anymore. And this seems to be the situation we have at the moment. So maybe to the credit of the Fed, they get it right this time and stay tighter for longer, while not completely destroying the economy and keeping it on a smooth path. I don't know where we are going, but I still think in the whole context, equity markets are extremely highly valued in the United States as well as in Germany, obviously. And corporates, if they've had all this margin increase over the last decade and nothing was passed on to the workers, they are in a real pickle. Because if you're an entrepreneur, you don't want to reduce your margins. However, the market might ask for that, especially if the workers are being thought after. Yeah? That's why we had this hoarding in our economy of workers. We always have this argument in Germany, and I think it's pretty much the same in the United States and the UK. We're running out of expert workers. Yeah? That's why we have to import a lot of workers. What we see is that the imports in people we have into the countries are apparently not delivering the quality these corporations need. You can't just assemble a car when you come from a nation where you have 4 years in school. So
yeah, I mean, I you know, I understand that obviously, but this argument of shortage of workers for me is, you know, I just don't understand. You have a country of 80 million people, and you say I have a shortage of workers. My bet is that you've got workers doing the wrong thing. You know, you've got a tax code which is highly complex. So you've got thousands and thousands of tax people from the government. You've got thousands and thousands of tax people in industry trying to save all of this tax. You know, for me, on both sides, that is wasted energy. So simplify the tax code, and there you go. You've got another 500,000 workers. You yourself said, I mean, you had your job center. You hire 100,000 people to find the jobs for 100,000 people. Well, then that's 100,000 people now added. How many more do you want? Just ask, carry on. I'm sure I'll find some more. Then you retrain them to jobs which are actually necessary and add value to an economy, and instead of things which clearly aren't adding value to the economy. And sooner or later, you've got enough workers. And you don't need to import.
Obviously, we've already closed out on the German section we had already. But as you mentioned education and retraining people. From the 1st of November of this year on, there's a new nifty law coming into Germany for online teaching, online training. Let's assume for a moment I want to give a seminar on how to deal with derivatives. If I go out there and market that as it's purely entertainment, you shouldn't give a crap about what I'm telling you. It's just to enhance your lifestyle and entertainment. That's all right. If I would go out on the other side and say, the skills I'm going to teach you might come in handy, might be valuable, I will need, and I'm not making this up, Nick, I will need an official permission. I searched the internet from whom I'll get this permission. So far, we are not quite clear on that, which of the civil authorities will grant me this permit, because otherwise I could get my pantsuit off. So if I would ever want to market an options seminar in Germany, I would have to tell the people, don't give anything about what I'm teaching you. It's just like watching Netflix. You can have here, and obviously I'll have to pay money for that to be certified to do this. It's a bizarre notion. Yes, we're really trying to train people. If you get a step further, it's not about learning something about derivatives or something. It's you have a course, an online course, how to become a good chef that people can qualify. You can do that at home. Yeah, you have your iPad in the kitchen and you build up some basic skills. That will already qualify that you as a little entrepreneur who is teaching people to cook will need an official permit to do that. Otherwise, people say, oh, I did not become a good cook. I want all my money back. And you have no protection there. It's madness.
Well, as I say, I think we said it a long time ago, command and control instead of entrepreneurialism. This is what I mean about adding complexity to an economy. Instead of allowing the economy to flourish.
Yeah, final last words. Now we're coming to the part everybody's obviously interested in, is CIO's mindset. I don't like the word mindset because every snake oil salesman, in Germany sells a mindset to become rich and wealthy and popular and you name it. However, I think at this point I make an exception because it describes obviously what I'm aiming for. And whom should I ask other than the person who's actually managed his whole professional career huge funds of money? We are now through the third quarter. Yeah, we're starting with the fourth quarter. And in the olden days, Nick, I had the situation, I was on one side of the telephone and had to offer whatever you wanted me to offer. Yeah, protection or to the upside, protection to the downside, speculative tools to the upside or to the downside. So I have a vague idea how my clients reacted when they wanted to buy a specific derivative or a specific product for the future. What I want to elaborate on, you were on the other side on the phone. You are sitting on funds of your clients, and I want to break that down in actually 3 points of view. You had a fantastic year the first 9 months, you had an average year the first 9 months, and you had a horrible year the first 9 months. Let's start with case one. You had a fantastic year. You've outsmarted the benchmark by I don't know how much. So you're 9 months in. What is your strategy? What is your risk appetite for the last quarter, Nick?
Well, again, you know, here's this hypothetical situation of yours, right? Do you have a one-to-one client relationship, i.e., in Germany called a Spezialfonds, or do you have just a general fund, an equity fund, let's just say, or whatever that might be? And you know, the investors are sort of fairly anonymous. You don't know who they are, you know, because in the first instance, it would really, the risk appetite is determined by the client and not you. At the end of the day, the client might sort of say he wants you to continue to take on risk. He might want you to sort of cash in. He might have his own reasons. If you're just managing a fund, you trade strategically and you trade tactically, and every quarter, if you like, is another quarter. And I don't see any reason to do anything other than treat the market in, you know, in all of your scenarios, trading well, trading badly, or average performance to change strategy. You look at the market each quarter and behave in such a way, because when you go to clients and you say, look, I have an investment strategy, and this is my approach, and you convince the client on that approach, you're talking about your investment process, and it has absolutely nothing to do with, oh, by the way, if I make money, then I stop. Or if I lose money, then I stop. You know, it's really about the investment process itself, and therefore it's kind of performance independent, other than sort of for trading vehicles like hedge funds, you might say, you know, when we lose 15% of the capital, we stop for a month and then reassess, and then we go back the next month. However they might treat it, I think it's pretty much performance independent.
Because everybody, especially the guys new to the market, they've heard these lines, ooh, window dressing in the last quarter and everything. So what you're telling me now...
I've heard that as well.
Yeah.
I've heard that as well. And, you know, guys who have underperforming, you know, in the last quarter, they'll be chasing performance. And you do see sort of certain trades around quarter dates, you know, but these window dressings, I think, are more, rather than about performance, but more about how much they've allocated. So let's just say they've got, you know, they got the market wrong and they've decided to be in cash, for example. And the market went up, and I think, oh, bummer, you know, went up. And at the end of the quarter, they was, oh, shoot, I don't want to say to the customer, I didn't have anything invested. So sometimes you might see people say, okay, I've probably got too much cash. I'll buy something towards the end of the quarter to show the client that actually I've been invested. It's just, I didn't get that wrong. I just bought the wrong stuff. And, you know, that kind of window dressing, I think, happens a lot. But the other kind of window dressing, you know, where you suddenly say, I've lost a ton of money all year, best I sort of swing the bat at the market, doesn't happen. In my view, it doesn't happen, because that's just a real recipe for disaster. I don't think that's how professionals tackle it. And if you've made a lot of money during the year, well done to you. You might want to feel that you don't need to sort of take as much risk as possible, but frankly, you're not judged that way. You want to show the clients that you are able to sort of have a consistent investment approach for every market environment over every quarter, and you don't want to sort of say, oh yeah, I didn't make any money in that quarter because I made it all in the last quarter, because that last quarter may be in the the big winner. And you can't say, well, I didn't really play in the October to December because I had a good first quarter in the year. You'd lose the money, you'd lose the mandate.
That's actually pretty much matching with the experience I made when I was still sitting behind the screens. We split our clients in two. We had the big mutual funds who had to do what the market was doing. The guys who are big invested in Delta One and all the ETFs, yes, they're not being paid to hold cash. And if the market goes up, they have to keep buying with the market, and if the market goes in a tailspin, they have to start selling. So re-amplifying what is happening in the markets themselves. Then we had the hedgies out there, and the hedgies were pretty much like our good selves behind the desks. If I had a bumper 9 months before me, because, well, what are we all focusing on? Being paid at the end of the year. So I was gradually, obviously, interested in not putting on the most risky trades anymore and reducing my risk management. The same we saw with the hedge fund clientele we had, who said, yeah, I've already achieved everything I wanted. Now it's bonus time is almost there. Now let's reduce our risk a little bit. And we've seen that on both sides. And one of the little anecdotes I like to play, do you know when the financial year of Goldman Sachs and Bear Stearns ended?
Was something like November, if I
exactly
something like November.
Yeah, and that was no coincidence, my friend. Yeah, that because the hedging going on, that was the other side of the equation. You had a bumper year. Yeah, when answering my own question, you took chips off the table, but you still put on some bets on the upside, yeah, through an option structure to say, fine, if there's another 2 or 3%, I'll take that as well, but I'm reducing the risk massively. If you had a really bad year, and as a hedge fund where you're dependent on that, clients did not allocate their funds to the public fund out there, yeah, to the mutuals who are offering pretty much. I have the chart on here, the 60-40 portfolio or 40-60 portfolio with some gold in. Then they had to do something. They had to come up with, but the legend that was in the market, we always see this, oh, now nobody was in this market. If you look at the S&P equal weighted, hasn't done anything over the year. If you weren't invested in the top 7 stocks, that could induce a year-end rally. In my experience, was simply not true. We haven't seen that.
It's a good point you bring up regarding the investment banks. They made that year-end November for a reason, to make sure that people didn't just, take December off. That because December, if they had a good year, December counted towards their, it was the first month of the year, and that, I think the motivation was right for them. But I think, normal people who manage money, I think, that most of them anyway that I know would be far more professional about that.
So we can put that clearly in the box of mythical assumptions.
I think so, but you know what? The world is a big place, and there are plenty of sharks around. So I won't say it goes that everybody plays the game properly, but I think especially where you've got a customer that you can talk to, the customer may well be happy with the performance and say, okay, take it easy. But if you can communicate with him, it's even better, and you should be where you're able to. But where you can't, you have to follow your process. Absolutely. Because you've got investors, not all of your investors joined in January, right? So you may well have a fund, a global equity fund, and you've had a bumper year. You made 20%, 30% in your equity fund. But you may well have had an investor who put his money in October. And then what do? You say, well, I'm not going to trade last quarter because then actually, for all the people who invested in January, they made 20 or 30%. You've got to treat every investor that you've got effectively fairly, and sort of do your job every day. Otherwise, don't charge fees.
Maybe a final word on that. Stan Druckenmiller was once interviewed, and the journalist said, "Oh, you're the fantastic investor," obviously praising him, and said, "You never had a losing year." And he said, yeah, but only if you calculate from January to January. If you take any other time period, there have been losing years in between. Yeah, so I was just lucky. No, that leads me to the last slide. I don't know really where it fits in, but it's one of these things that made me depressive. Why even bother? It's about divorce rates. all over the world. If you are married in Portugal or are
That's
proposing,
phenomenal. That really is a phenomenal percentage.
You have a 94% chance of getting divorced. And hey, sorry to say it again, right at the bottom, who's there? Divorce rates.
Oh, well done, India.
India, there we go. We started with India. We shall finish with India. It is, I think, a sign for a wholesome society where families stick together. We've seen it in India. The Prime Minister of India seems to be on the right track. I forgot that earlier. Maybe I switched the screen off here. That was one of the last bits of news about India. I heard that why I'm so extremely bullish is that now Mr. Trudeau is massively upset with India because suddenly his secret service or secret police came up with information that allegedly Indian state operatives have killed a Canadian Indian on Canadian soil. Yeah? Well, I think, okay, we've seen a lot of things in the past happening. Governments do weird things. So that wasn't actually the point of my concern or of interest. The point of interest was he came out with that one day after the G20 meeting, after he was back home. And I was wondering, why do you first of all, you don't have to mention that, even if it would be the case. Huh? So why do you slip it out now and actually have to upset the host of the G20 by making these allegations, which you might as well have just kept for yourself? Any idea on that?
No, as I said, we talked about, our first point was politicians saying very odd, undiplomatic things. And now you finished the program with politicians saying things which I think is sort of very undiplomatic. I mean, I would assume that if you had such concerns, you do that one-to-one. And why you do that publicly, I don't know. You're obviously trying to achieve something. We can't sort of put ourselves in the mind of Mrs. Baerbock or Mr. Trudeau. So I would just say, well, I'm glad I'm not a politician.
You just might be terrified by a growing, stable, conservative India, especially there are rumors that he's actually the love child of Fidel Castro, Mr. Trudeau, just to slip that in at the end. In that sense, Nick, any last words after my last words?
No, I'm afraid you've taken the wind out of my sails with that inflation.
Difficult to top
article. There was no monetary, there was no money supply in that whole IMF thing. I'm flabbergasted. I can't say any more than that.
Okay. Thank you very much. Namaste again. And yes, I hope you will join us next week. Please comment, subscribe, and like us. And we like to keep that going, but we would like to have more viewers. So do us a favor, tick the box, comment on it, share it with your friends. Thank you very much. Bye-bye. See you soon.
Bye-bye.